Hi, this is Joseph. I want to walk you through a couple of trades. The one question that I received three questions on the euro dollar trade, so I thought I'd make a quick video on it. But I also received one question on the pound dollar, so I'm going to start off with the pound dollar here so I can cover them both. And I like to do that a lot for my coaching clients. That way they get a pretty good idea of not only the trading system and how it works on a particular day, if they weren't trading, but if they were live trading one particular currency pair or a specific market, let's say whether it was gold, silver, oil, whatever, a stock, I can always make a video just like this, and I love to walk you through the entire setup and how I trade it. Because again, as I've mentioned many times, when we all use point and figure correctly, when we all do the same thing, we're all going to get the same targets, we're all going to get the same stop loss. That's the really wonderful thing about point and figure, is that we're all going to get the same data and the same information as long as you construct the charts the way I'm doing. If we're all working together and kind of finding our trade setups based on different markets and different time frames. So this was a 30-minute chart here on the pound dollar, so I want to walk you through what happened here. This was one of the last two trades on Friday. And what you can see here is that I've got just basically one indicator. I'm just using volume. That's really the only indicator that I use when I'm going to, especially if I'm in a day trade like this. Every once in a while, I will use, let's say, a moving average, or I'll throw a moving average on there, or maybe another like RSI or something. But that would be like a larger time frame. And what I'm doing with that particular indicator is not really confirming an entry, but what I'm doing is scanning through my charts so that when certain things reach certain levels, or they look in a certain way and they start to develop certain patterns, then I will pay attention to one particular chart over another. That's how I very often pick a better trade opportunity each day. I'm always really sensitive to which ones are likely to go sideways and really not produce too many opportunities versus one that looks like it's going to create more activity and there's going to be more participation. And I was well aware that when we went into this, when I got into this trade initially with the pound dollar, that it probably wasn't going to be a big move. And I'll show you why I can determine that. One of the ways that I can figure that out with my point and figure chart. We'll go to that in just a moment here. But again, I'm counting the waves. So these two indicators here, the bottom one is a wave, it's a volume indicator, but it's more or less like an average wave count of the volume. This is the original volume clip that I see here. This is a volume average. And I need volume. I need volume to be able to identify that whole supply and demand, that constant battle, especially when I'm looking at these reversal turning points. I want to make sure that if I am going to sell, that there's going to be a significant retracement or a move to the downside. And in some cases, it could actually be the very top, at least, relatively speaking, according to the time frame that I'm trading. It could be a temporary top that could still produce some kind of a big opportunity, right? So sometimes we can see the pound dollar drop maybe 150 points, 200 points, even on a pullback. It is a possibility. So I want to make sure that when I get into the trade, I'm calculating everything correctly, and I'm watching who's participating. I can see who's participating by analyzing not only the phases of the consolidation, but also the behavior and the footprint with this indicator, this particular volume indicator. So by counting the waves, I can see where things are either getting a little exhausted. Let's say an up thrust that sort of fails and then reverses, and I get a lot of activity on that reversal. That's also a possibility. So you can see that with this wave right here, there was 12,200 contracts traded to the upside. And then I had 5,200 contracts, 5267 to the downside. And then one more move right up to that resistance point, again, testing this old resistance. You can see that blue. I'll tighten this up so you can see where this comes from. This is actually an old resistance point from, this goes back to September 3rd. So it was definitely a clear resistance point, and we kept testing that level. I'll go ahead and pull that right back into view again. So there's that resistance, and here is that last move right up there. And you can see there still is, quite a bit of volume and participation with this move here, but it's not going very far. You can see that none of the candles or none of the bars are really closing above this previous resistance. It's certainly not taking out the high from that September 3rd, and you can see that volume levels relative to what was going on here when the market opened for the London session, it just wasn't participating. There just wasn't enough. There wasn't enough to drive it. And then the reversal, and we start to get big volume candles on these reversals, and you can see that for the most part, this is a pretty strong price swing to the downside with a lot of volume compared to a lot of the activity that we saw the previous day or the day before. So that really helps to confirm a lot of that activity. But then I need to go to my point and figure chart. And I always have my point and figure chart side by side. So that previous chart that you were just looking at, that bar chart with the pound dollar, this is the pound dollar here. And you can see basically the same formation. You can see that there was a move here to the upside. I had a resistance. We tested it, broke through. Again, up thrusts that are more or less failing. And this was that move and that activity with all that volume. And then you saw it pull back. You saw it test, and it was starting to tire. You saw the weakness there. I believe it was, what was it, 57? 5,500 contracts moving right into that resistance point. There is my test, another test, and here is my triple bottom entry right here with an entry at 1.3863. Now, based on the data that I had, now there is quite a bit of data here. One of the confusing, I think, aspects of using point and figure is knowing which columns to use for your count, meaning that that is going to determine your take profit target. How far is price going to go? Some people will refer to it as fuel in the tank. How much fuel is in the tank to drive this thing in the opposite direction? And we can gather that information, again, based on what I did on the previous chart, that bar chart, counting the waves, watching volume, analyzing the phases of consolidation, and then looking for the reversal patterns, confirming the tests along the way back down. You're going to see the tests in the euro dollar they were much more obvious. I mean, just by looking at it, you could clearly see the tests, which is confirmation. I'll show you that in just a moment here. But again, with the count, what we're doing here is we've got a much further count if it's going to drop in this is going to be a significant sell-off, let's say next week when the market opens for trading. But at this point, I'm going to take, I always have a first conservative count. So I'm going to take the data that I see based on these price swings and these tests, and that's going to give me a conservative first target. I always have to have a conservative first target, which was right here at the 1.3839. This paid approximately 24 pips, 24 points. Trading a standard lot, that's approximately $240. Obviously, it goes a little bit lower. And where I would target it to, if it was going to be a second target, would be incorporating the data here or a psychological level. Now, it didn't hit 20. Normally, I would trade to 20, and the reason that I would trade to 20 is that this was Friday. Friday, as it starts to get close to the close on Friday, I don't want to get stuck holding onto a position. So I've got to honor and respect this initial first target, 24 pips, then I'm done. I'll wait and continue. Now, this isn't a long-term swing type trade or something like that. This is for a day trade. This is specifically for a day trade. I want to get out. I don't want to hold on to the trade through the weekend. So I have to realize that as I'm getting closer here and time's running out, I've got to do the right thing and I've got to lock in profits where I see my target. So again, if it's here at 38, or let's say it starts to drop down to, let's say, 35, 34, and the market's closing and I'm still holding on, if it doesn't hit the 20, I have to be prepared to close the trade at whatever level it's at. So there was a little more profitability in this particular trade, but I'm just going to mark this one up as a 24-point move. Let me show you the euro dollar, which was a much better structured trade and a lot of confirmation with. So this is the euro futures, again, 30-minute time frame. There's another resistance point. This is an old resistance point that was very, very similar to the pound dollar that you saw just a moment ago. And here is one price swing, 30-minute bar. We've got 15,600 contracts moving right into that resistance level, and then it stops. Now, I say this a lot. Picture-perfect trading opportunities are wonderful in the sense that there really isn't a whole lot to worry about because everything is in alignment according to the way I trade with this system. And you're going to learn that if you go through the coaching program. It's not difficult to do. It's always going to be the same thing. There's nothing that we change. I haven't changed this trading strategy. I know a lot of people out there, they'll come up with one simple moving average and then make a YouTube video and then it'll stop working. So then they have to go out and they have to make another one. And they're constantly changing up their strategies. And you have to wonder, how can you create any consistency in your business, your trading business, if you're constantly changing up the strategy and looking for a new one? Like, that's just like chasing. It doesn't make any sense to me. And I know what that does because I did that in the beginning of my trading career, and it doesn't work. It's very, very difficult to be consistent and profitable and to do it for a very long period of time. This trading system is based on solid market principles. The greatest, you've probably heard me say this, the greatest traders in history use this trading system. And for the most part, a lot of them don't really want to talk about it. You don't want to make a lot of videos on something like this. This is the reason why you don't really see too much of it, especially with point and figure, is first of all, a lot of people just don't like it. They look at it and it just doesn't make any sense. Most people, when they get into this business, they're looking at bar charts or candlestick charts, and it's easy to read. And then you look at these candlestick patterns, because I did it, right? I went out and bought all the books on candlestick patterns back in 2000 and 2001. And then I started printing them off with a photocopy, right? I started printing off the different candlestick chart patterns that I needed to trade. And I would just fire them off. I would just trade them all inside a consolidation. It was a mess. And it never really produced any consistency for me. So you need to understand how to analyze the phases of consolidation, use volume correctly. Volume can be a tricky indicator to use if you don't know how to use it correctly. A lot of people misinterpret some of the information that they see with the volume indicator. It's very easy if you understand the structure and the basic mechanics. That's what you need to do. You need to sort of unlearn some of these old mistakes and some of the things that if you've tried it before and it hasn't worked for you, you need to unlearn them, forget about them, and start over with the basics. So you can see here that this last move, this bearish bar right here, runs right into that resistance, stops, turns around, closes flat for the most part, and then we get this accelerated move to the downside. This price swing right here produced 17,579 contracts within that price swing right here. 30-minute bar chart again. Volume, again, picking back up. Also paying attention to the timing. This is at the London Open, so I can see that this thing is starting to move in reverse. Now at this point, my point and figure still didn't give me an entry. I had to wait for the retest. I always know that there's going to be likely a retest, and there's very often multiple retests. And these multiple retests, if I'm already into the trade, that's additional confirmation for me. Let me show you exactly what I mean. So I'm going to go to the point and figure chart for the euro dollar now, and you can see the high, you can see the pullback, you can see the test, and where I got into the trade. Let's go over here to the point and figure. This is exactly the same activity. There's the retest. There's my entry right down here. There's another retest. That's that second retest right there. So based on the data and the way I constructed this chart, it gave me a final target at 1.1823 with an entry of 1.1875. Now remember what I said earlier. I say this all the time, and I teach all of my coaching students how to do it. You want to find a conservative first target, and then use the data that's here, all of the data, to then find a final second target. And you've got to be prepared to scale out or be prepared for what if, right? What if it stops at the first target and doesn't go any farther? Again, that's why we want to have a conservative first target, and then we always have our final target. Final target, again, produced 52 pips. 52 pips, standard lot, is $520. The other trade on the pound dollar produced $240. So between that one, $240, and this one produced $520 with just these two trades alone, and it only took just a few hours. It didn't take that long. It wasn't difficult, and this was more or less a picture-perfect trade opportunity. You can see the tests. You can see the breakout, the failed breakout to the upside, the strong. This column right here, this is a very unique column with point and figure, and when we see that, it does several different things as far as the confirmation for us. I discuss all of that in the membership course. You can see the test again, and then the second test, again, confirming that. But at this point, I was already into the trade. So from 1.1875, it went up as high as 95. So I was negative approximately 20 pips, but the payoff was 52 pips. That's a key thing to keep in mind. Point and figure is not only going to tell me where to get into the trade, it's also going to tell me where to place my stop, and it's also going to tell me where to take profits. And with that information, I can determine, is this what I want to trade? Is this going to be a 2-for-1, 3-for-1, 1-for-1 reward to risk ratio? A lot of people, they need that data. They need that information before they decide to get into trade. Some people don't want to look at a trade that's 1-for-1. But using point and figure correctly, you can always determine, is this the type of trade that you want to execute? And as I mentioned earlier, this structure was very, very different than what we saw with the pound dollar. The pound dollar was a lot more flat for the most part. The volume wasn't as significant as I saw relatively compared to the euro dollar and the volume. And that is one of the reasons that I was prepared for taking profits at that first target and watching that one closely, because it didn't look like it was going to go to a second target. It looked like it was just going to flatten out. That's exactly what the pound dollar did. This one was very different. This was a very significant reversal. We had a lot of data, a lot of volume, and we could clearly see that reversal at this point. This was really easy to do. Now, this setup occurred on other currency pairs, and it also sets up just like this when we trade the Dow, when we trade the S&P, when we trade gold, oil, silver, and stocks. Same thing, same behavior, same basic setup, always doing the same thing. Starting off with a candlestick chart or bar chart, using volume as our only indicator. Yeah, you can use a couple of other indicators if you're familiar with them. I do too. Like I said, I've got another little chart but I only use it when I scan through my charts. It is not the indicators that I use that are not volume. Let's say it's a CCI. That's not enough to justify and qualify an entry for me. I need to see my point and figure. I need to see volume. I need to count those waves. I need to analyze the phases of consolidation so that I know that I'm getting in phase C or D, and I don't mess around inside of phase B, which is usually all of that choppy consolidation, and that's where most traders lose a lot of their money. If they've made some profits up to that point and then they start trading inside of consolidation, they usually give back that profits, any previous profits, or they end up, driving their account negative. I used to do the same thing. I would trade candlestick patterns inside of consolidation when I first started trading. I didn't have enough information. I didn't have enough experience. And I was just doing what the books told me to do, trade the candlestick patterns. And I saw them everywhere inside of consolidation, and it doesn't work. You need to know how to identify the phases of consolidation so you don't make that mistake. Because those mistakes are going to put you in a position where all you're doing is spending the rest of the week or the rest of the day trying to earn back the mistakes that you had made, trying to earn back those profits. You don't want to do that. By doing this, you're going to make almost every single one of your trades be a winning, successful trade, which is what you want. Occasionally, you're going to have a loss, but it's going to be a lot easier to earn back that loss when most of your trades are winners. And you can keep your losses small. Again, you can always calculate your reward to risk using the point and figure method. So if you want to learn more, get into the coaching program. I've got an online coaching program with weekly live coaching from me. I do the live coaching. And then anytime you ever have any issues or you're stuck or you want another video or you need some more information, I always make videos like this for my coaching clients. I love making videos. It's the easiest way for me to communicate because, an email, I would send out an email and then people get lost in all that translation. There's a lot of, it's difficult. It's easier to follow with a video. I love making videos. I make videos all the time for all of my coaching clients. I, never say no. So that's the way I've been doing it since 2007 when I started coaching publicly. So again, there's a limited special discount promotion right now on my online coaching. I know that it's a really difficult time for a lot of people. Very scary time for a lot of people. Depends on what you're going through, who you're close to, what you hear, and what the circles that you're involved. But there's a lot of information out there going on about what the future holds, what it doesn't hold for us, and you've got to start making money with your trading account. You don't want to keep testing. You don't want to keep learning. Do the right thing. Learn how to trade successfully. Again, as I mentioned before, and I know it sounds kind of cheesy to say it, but it's true, the most successful traders in history use this method, and you should be using it too. Thanks for watching. I look forward to trading with you.